Good evening, all. Ira Epstein of Linn Associates with your metal market wrap-up. And this wrap-up is for Monday, the 1st of March, 2021, just after 5:30 in the afternoon. So let's take a look at these markets. We've reopened, and as you can see, the markets are up again in the stock indices. Today was one of those interesting days. If you looked over the weekend, once Johnson & Johnson got its approval for its COVID vaccine and the combination that the Democrats yanked the minimum wage out of the COVID relief bill, and then later even the tax package they were trying to use as a penalty on corporations that were not giving the minimum wage, well, that made the COVID bill come alive. Good chance of passage, yep. There'll be fights about it, but by March 14th, we'll have a package, I believe, of some type done. Could even be sooner, as the Senate's agreed to take it up this Wednesday. You put that together, solid PMIs all over the world coming in data reports where things are looking better and better. Even those countries that are slipping are still slipping and staying in expansionary readings, and that's bullish. So we saw the stock market take off. Gold still has the same problem it's had. You know, it'll change one time, but until that inflation reading really picks up, don't know what's going on. We saw some readings today of the ISM market information on manufacturing, and prices paid have picked up. They look to me like they're getting hot. So we'll see if this market responds to that. The copper market could still be dropping here back to the $4 level before everything's said and done, maybe even under that. Dollar index was higher. Most currencies waffling right here. As you take a look at bonds and notes, I've moved to the June. I just noticed that when we reopened, instead of getting quotes right away in March, they weren't coming through. The Junes were. So maybe the lead month is moving on you right now. I'm sure the volume and open interest will stay in March, but might as well make our move at this point. And when we look at the energy markets, OPEC meets on Thursday. You know that these people, they run around and everything's supposed to be a secret until they hit a reporter, and then they sort of spill the beans. The market is anticipating the release of more barrels onto the market to do away with some of the tightening. I'm guessing, this is my own guess, anything around 1 million barrels is what the market is looking for. Lower than that would be bullish the market. 1.5 million or so would be probably a bit bearish on the market. It's my own guess as to where that's at. On the gold market, as long as you stay under the 18-week moving average of closes, I stay bearish. Now, I saw someone did write me on YouTube. And by the way, if you're watching me on YouTube, you know, it doesn't take you anything but a little finger to hit subscribe. Then you'll know every time I put out one of these updates. And if you like these videos, hit like and write me a comment. I'd really appreciate that. It helps our ratings, and it makes it fun for me when I go there each morning. That's when I read them, is in the morning. And I'll get back to you if I think it's worth getting back to. But I had a question, do I use exponential or simple moving average of closes? I'm using simple moving average of closes, if that helps you. I try to keep everything with that KISS method. Keep it simple, stupid. You know, that's what I do. And it seems to, for me, I like it. So when we look at this, the bias is still down, the market's staying under that number, so everything's still bearish. As you can see, you have literally fallen apart in the gold market. What we thought might hold fell apart on Friday. No bounce to it today, still staying down here. So you've gone in waves to the downside. Where might this market head? Well, as you can see, the swing line has still got a big, broad picture to the downside. Now I'm going to crunch the chart up a little bit so we start getting better pictures of it right here. Lower highs, lower lows, bearish. The market's under the 18-day average, bearish. I want to take you back right here. At this point in the market, the market had the 100-day average, and this was on February 19th, over the 200. You got a crossover right here on Monday the 22nd. Let me take that back. All right. Normally, that's bearish in a market. Now you've got the 18-day, then you've got the 100, then the 200. That's a brand new bearish setup. Markets often look at that, and as the traders start looking, they get more bearish. And if you take a look with me, what happened It was sort of the tripping point as to what the market has done. So if you're a moving average person like I am, you watch these and you learn to play what the norms are and what other traders that look at that are. And that was a bearish setup, all kinds of bearish crosses going over there. Not the 50 and 200 day, but very important ones. Where are we? We're riding the lower Bollinger Band. Okay, market's going to have a hard time just breaking away from that, a very hard time. And I am hard at work, still doing my enhanced Bollinger Band course right now. So today I spent probably 5 hours recording. I didn't like the intro to it, so I'm redoing that right now. I'm hoping it's this week. I'm putting hours into this thing. I love it. And I'm learning a lot as I'm doing it. It's so funny, you start putting down in writing what you really are doing because it's second nature to you, and it changes things, not for the worse, for the better, because I'm able to explain them even better. But I teach that the first time you hit a Bollinger Band, the pros take money off the table, especially if you don't have an embedded reading. I'm not changing my thinking. If you want to ride it, best to you if it keeps going down, and I hope it does for you. If the market, to break the downtrend, you got to get all the way back up here, which means this 18-day average of closes is going to be resistance. However, do I think the pros are going to be aggressive on selling? I don't. Why? Because you're oversold. The gold-silver ratio continues to dribble to the downside. That favors the silver market, but the silver chart's also bearish. With Friday's action right here, you turn this trend down. Remember, we did the weeklies from Friday night. I didn't do the dailies for you, so here's the dailies now. So this is Friday, lower highs, lower lows. The objective, 26, 25.80, the lower Bollinger Band, and you got your bounce. That's what I normally expect. Can you retest it? Sure, but you're already in oversold territory. I'm not an eager seller of the market in terms of my mental mind. The trend is down. Market is bearish from right here. If you were in my morning subscriber video, I was talking about that. Didn't quite get up there, but the risk was all the way up here. That's $1 risk. I wasn't even interested in that. Copper could break to this 18-day moving average of closes. Right now it's 393.19, and it seems to be going up about 300 points a day. So if you look at that, tomorrow probably closer, after tomorrow, maybe you get up to, when I do this in the evening, 396 or so. So I'll be looking at it. Right now, if you broke hard, I'd look for the big support at that number. Take out 407.65, you're going to scare a lot of people, I think, and you should be scared already. The momentum turned on you right here. On Friday, not today. You lost your embedded reading. Unless you get it back right away, the odds favor you're going to get, what, more downside. So this is how the market finished out today. Slight gain of 200 points. Got up another 25. We'll see if that holds on. I'm still looking for this to come together. To prove me wrong, you'd have to get up over the most recent high, and that's quite a range from here. So it's hard to play for that to happen. You got to use real money, not just talking theory here. Slow stochastics in platinum. You're in a downtrend. You're already oversold. I think the market's very inclined to fight a battle at the 18-day average. Should it just let go, maybe you have a downside target here of 1121. I'm not believing it's going there. It could, but I just don't see it just yet. In the palladium market, look where the battlegrounds ended up. The combination of the 100 and the 18-day average. On Friday, you had your big break. This should become resistance. It did, and it's still there right through now. Are these metal markets easy? They're very difficult. Are the grain markets, not grains, currency markets easy? Not at all. I'm seeing difficult market trades right here. Even with the big rally in the stock market today, I question if it wasn't a bounce in a market that's turned a bit bearish right here for the near term. And don't get me wrong, long-term charts are still all in the bull camps. The weekly charts are mostly in the bull camp in stock indices. It's the dailies that are problematic. In the dollar index, you went to the lower Bollinger Band finally. You hit that on Friday. Then let me make sure, was that Thursday or Friday? That was Thursday. What do you do the first time you hit a Bollinger Band? You know what I teach. I teach that you come out of your position. Or at least that's what I believe. Some traders like to hold on to them with trailing stops. Okay. But that's what I believe. Now you came up today, and we'll see what's going to go on between Friday and today. What did the market do? The market's all worried about what interest rates are going to do right here, and they have backed off. Now, we get the Fed Chair Powell is going to speak this week, so those are things we're going to want to hear. He's certainly going to be talking about what we see. You know, what I'm showing you here is what I offer free. If you haven't had a trial to my research, and you can get the Linn research with that too, we'd like to give it to you. How do you get it? Well, you're going to get my morning subscriber video. You can get my ETF video if you haven't tried those before. My written updates, it all comes in there. And any of the Linn packages we have, which is literally all the sectors of the futures markets. How do you get it? Remember the word free. Just go to our website. Go to free offerings. You can sign up there. Remember to give me a like if you like this video and become a subscriber to even this. This part is free on YouTube. I'm Ira Epstein. You have a good day and I'll talk to you tomorrow.